good on daily time frame. Now there is a break of a supply roof at this level. This will be our RS on daily, and this is our SR on daily. And after break of SR, price returns to ROS on daily. Here becomes your new demand floor. So you're going to watch out for price return into this box as a new demand floor. Break and close, supply roof. And the up is the supply roof. So we're going to use interchange rule. Break of a demand floor, we turn it to SROS. Another beautiful daily cross indicating that the yellow metal will still face more sell resistance on technical because we are locking three structures. Is our RS unlock, as a RS, as a RS on daily, as a RS again on daily. This is the most important demand floor for me, descending trend line DTL. I'm also going to lock it. So why am I looking for this? Is because I'm looking for a potential retest into that structure. And I'm looking for a buy opportunity. I'm looking for a buy opportunity. That's what I'm looking for. And I will tell you why I'm looking for buy opportunity. After the breakout structure, price returns on SR is switched from ROS to SR on daily. Remember? These are ROS resistance becomes support on breakout structure. And this is your RS. Is our RS daily resistance level. Now, on daily, there is a powerful daily cross that have given us a buy authorization. And it is on that note that I have declared you can see that double top structure. We enjoyed it. We've sold, we came back, we retested it, and price has broken it. So here becomes your new demand floor, 38. A push into 38, I will buy. This is what I'm looking for. It took me quite a while, but this is your buy order. So I'm looking for an unlock key on this area. I want to unlock a buy potential there. So as soon as price comes there, I go for unlock. Now, I will also give my reasons why I'm going for that. Now, let's go back to our chart to better understand what we have done. Now, you see, after break of the double top structure, market has dropped significantly. Market have dropped significantly, over 500 pip drop, respecting the double top structure. And to further confirm it, price came and retested the neckline. This is the neckline of the double top structure. This is the double top on daily. And market have come back to respect that structure. And I want to call that structure DTL, descending trend line. And we have here ascending trend line, ATL. And we have here horizontal trend line. So we have three trend lines on daily in this current price action. Look at the price action. We are trading for now until market moves away from this price action. Then we can now look at something new to do. But at the moment, we stay on what the market is given. So now we have seen a daily rally after we had a Wednesday candle break of the neckline of the double top structure. This is an M structure. Let me illustrate it. A double top structure. It's is what it is. Something like this. Come on, what's going on? So this is what we have. Is what we have here, and this is the neckline. Now today we had a candle broken the structure and upswinged. So that structure, everything that has to do with that is over. So we are in a new chapter. Now Wednesday candle broke the neckline. So let me also label it neckline. And also a descending trend line, DTL. So we had a Wednesday candle break the neckline, and today came back to retest it. And you have seen why market bought at 3,339 into 41. And you have seen push into push, and you see the market rallied. There is a probability that price will return to respect 53. Now, if you look at the structure, there is a horizontal broken supply roof at this level, 55. So there is a probability that market will come back into that zone for a buy, or price will come back to retest 37, 38. So if you are staying on any of those levels, you need to stay on those levels strongly. You need to stay on those levels strongly. So this is the next place where I expect to see a bullish reaction. So I'll be looking out for a buy opportunity on 55 into 37. So if you're coming in there, make sure that you have 200 pips to back yourself up, that the market is not going down. It has already passed the daily buy test. So all it needs to do is the liquidity test. It can dip itself into the structure, into 35, and you see it return here, 425. This is where the market is coming to. So I will keep my eyes on this ascending trend line, knowing fully well that whatever push price away from here is not taking us anything less than 413. And we have a daily rejection candle here in the month of May 8th. So I will also recognize that structure 413. So the market might want to update itself. You push into 413. That will not be a bad idea. That will not be a bad idea. Yeah, I'm going to be a bad idea. So it's going back into May price action. Look at that rejection candle on daily, signifying strong resistance to upswing. So I also want to identify that. Yeah, we must also bear in mind that market can also smash it. So at 3,416, you could be seeing some quick market reaction at that level where market will brace in, touch the structure, and quickly react back. The same way you see market reacted here on Thursday, 08 May, we could have similar price action repeat itself today. The reason you have had this is because of a bearish order, a strong bearish order on that level, and the market respected it. So every time you see heavy orders is being respected, there is a reason for that. There is a reason. So orders are not placed for fancy. So at that level, you could see market react. You could see market react on that level. So let also mark it out and hope that if we have a push into that zone, we could be seeing some level of rejection, just like we had on that day from that zone. And the ultimate goal of price is to continue upswinging. So I see it on technical that 414, 416 will come on a double confluence. And if I have to put my vertical rule on today's candle and see where it cuts across, it gives me exactly four a push into 419, 419, 420. But it is better to be on a buying side than trying to sell. The reason is because nobody can tell the liquidity that is driving the market and to what extent they will be exhausted for the day. So nobody can tell the liquidity for good buying tomorrow. Is it going to buy out through the entire day? No one can actually tell. No one can tell. So it is best to look for buy opportunity and ride with the sentiment. So because what I'm seeing here, it's that if we push ourselves into 16, 17, 18, 19, 420, we could be seeing rejection. A push into from 16 to 20, you will see a sell. And it's going to come on a double confluence. Our ascending trend line meets a horizontal structure. And on daily, where they cut across, that area provides a sell opportunity on double confluence. Remember, the more confluence, the greater the probability. But what I'm looking for is a buy opportunity. A buy opportunity, a push into 55 wouldn't be bad. If I can get a push into 55, you're on a good side. And a deeper push into 38, you're a legend. Because a push into 38 into 35 will draw you by over 400 pip up by. So this is what exactly I'm saying is that if we got a push into this zone, we could get here back and that's a win for you. So it is better to be on the buying side than on the selling side. The reason is because if you place a sell, you aren't going to tell if the buyers at the moment, if the central bank buying, it's more than the selling. So no one can actually tell. So the right thing is to stay with the sentiment of the market. That's the right thing to do. That's the right thing to do. So I prefer daily. Going forward from today, every day we'll start a chart. We're going to start a chart with daily. Now, the idea of daily is that daily gives you a very clear directional buy. You see, this trade on this day was a giveaway trade on Tuesday 10th. This trade was a giveaway, ultra giveaway trade. A full day rejection, but came back, retested the neckline of a double top structure that was broken and sold down. 500 pip drop in price. So you see, trading higher time frame saves you stress. And going forward, we'll try our best to make sure that every day we start with daily, weekly, as time permits. So my buy floor is 3,355 and 3,338. That's my buy floor. I prefer that floor if it comes there. Both of them are good. Both of them are good. You can stay in any of those levels. Any of those levels are good, but you must keep yourself on a very tight stop, on a very robust stop loss. And one of the ways you do so is limit your lot size. Stop bogus lot size. A lot of traders are used to bogus lot size. With a bogus lot size, gold requires bogus stop loss. So gold strategy is minimal lot size, bogus stop loss. That is the only way you're not going to be edged out of the market. So if you have two lot size you want to put in a trade, you can't put two lot size into five. You don't have such accounts to hold it. Why not do 0.1, 0.2, 0.3, 0.4? Then as the market is progressing in your direction, then you are making profit already, then you now increase your lot size and match it with a minimal peak move in the market with a reasonable account, you're off the market. So instead of doing very huge lot size, when the market moves 5 or 15 points away from your market, it hits your stop loss and you're out of the trade. And at the end of the day, your analysis are very, very right. So I think traders need to stop this idea of bogus lot size, which has been, masterminded by the gurus, the forex gurus, the flamboyant forex gurus. They always show heavy lot size, 100 lot size, 200. Look, these things are not realistic. These things are not realistic. You know, if you are doing this, you will always cry for account management all the time. All the time. I can tell you for free. So if you continue to do bogus lot size, you will continue to cry for account management all the time because I know you are blowing account up. How many people can manage 30 lot size position and market moves against you by 100 pips? How many people? The emotion of seeing the loss is traumatizing. So you're going to close your trade. But at the end of the day, your analysis is right. So let's wait and see if this baby comes here. Baby, come to us. If this baby comes to us at 55, it's a win. In fact, I'm beginning to see some daily signs. This area is not, it's not bad per se. 72 is not bad, but I don't want to do 72. If you are doing 72, can you risk extra 300 pip? Because extra 200 pip so that you can push yourself into 50. So what if the market gets into 50 and continue to extend into 38? You are heading into 400 pip loss. No, that's not advisable. So the best thing is from at 75, you can take a buy risk, knowing well that the sentiment of the market is still bullish. You can take a buy risk here on a minimal lot size, knowing fully well that the market will end bullish for the day. I'm very optimistic gold will end bullish for the day based on what we've seen, the economic data we have in 2 days now. It tells us that it's going in our buy favor position. So if you enter at 3,375 for a buy and the market moves you by 200 pips, don't shake. You don't need to come out of that trade. The market is picking liquidity for buy. But what will matter is what is your lot size. So if you're on a bogus lot size, I can guarantee you are going to close the trade by yourself and exit. And at the end of the day, you will see that you were right, but you were greedy at the same time. So limit your lot size, please. Limit your lot size. Forget about bogus lot size. It's not going to help you.